Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for oil, Brent Crude, UKOIL, the price of oil versus the dollar. This is a daily chart. Make sure, if you want to stay up to date with all of our trading chart videos, click that red subscribe button. So, looking at a candlestick chart here, each one of these red and green candlesticks, as they are called, represents one day of price trading action. So if it's a red candle, that means the day closed lower than it opened. If it's a green, it means it closed higher than it opened. What we're doing is we're looking at this multi-year trend line. It's come down to the decades, right? We can see if we just take these highs and connect them, we go all the way back here till 2018. And we see now that we've got this support and resistance zone. And how we've defined this zone is by other times when price action visited the same place. So you can see all the way back here in 2018, Christmas 2018, price sold off just to about $48 a barrel. Then years later, price revisits that. Then we have a big, huge crash, right? A big oil sell-off. And what's significant here is that price gapped. That means the market closed here on a Friday and then opened all the way here on Monday. And gaps are typically a great representation of support and resistance. So now if we were to use that same gap and apply that to where price is today, we see that price is kind of precariously hanging on to this zone here. But it looks to me like it's going to fall out. So why do I say that? Well, we see that price is now kind of cooling off and starting to move below this fast-moving average. Now, it hasn't done completely yet. We might see a final little kickback, but unlikely, as I think we're going to see as price start to roll over with strength in the U.S. dollar. So as world markets kind of sway with a unsure about how a second wave of coronavirus will affect the economy, if that's what happens, then we'll see a bunch of money put back into U.S. dollars, meaning anything that's matched against the U.S. dollar is going to tank, right? Oil being no exception. So let's go ahead and see if we can get any smaller. Look at a 4-hour here. Aha, here we go. So let's take off the volume. If we just look at this is the very top we were looking at that chart, right? So price has been riding in this top zone now for about a month. It's been pushed up here, but we can see it's having trouble holding on. Okay, now just like we saw with Bitcoin, I believe, this initial trend face. Now, trends can expand and go out deeper like this. Entirely possible. But we're seeing is that price action is starting to wane over. So this initial trend face, the front face, if you will, of the trend, right? First high, second high, couldn't make a new high, and then now broke here. Now we haven't had a new low yet. But the first thing that needs to happen is if we see a low be below $37 a barrel. Then we'll have a lower low, and that's when we'll confirm the beginning of a downtrend. Now, the other thing that could happen is that price could test $44 a barrel again, right? But as you see, if we kind of zoom back out to our bigger picture, we see really price is just kind of dancing around here. It really hasn't achieved anything because in the big picture, this is kind of like the face of the cliff. And this trend is super steep. So these super steep short trend lines really can't compare with the broad sloping trend lines in the big picture. So let's say we take that off, and now I just look at this as a rally waiting to be sold. So first confirmation, right? Price drops below, starts making new lows in the 4-hour. So use your 4-hour and look for new lows. In fact, if price drops below $39.50 a barrel, that's your first key. You're like, okay, maybe something's up. It comes and rests here. It'll make another rally, and if that rally fails to kick over $44 a barrel, sell hard. That's just my opinion. That's not trading advice. Thanks. Okay. What else? Okay, let's say price goes low. right? So I was just taking that face, but you can take this trend line all the way back to here. It still works the same way. So if this rally starts to wane, eventually we'd be looking for a revisit to the $16 a barrel sell-off. You can also make this a trend zone, a trend channel. So this giant multi-year trend, you can say, okay, apply that. Look at that. Doesn't that work out nicely? Candlesticks here all kind of stay within the buy this trend channel. So that means that would, trend would come down, push down. If we look in the future and think that the candlesticks will continue down this channel, we could see lows as low as $11 a barrel. So, all right, everyone, have a great week. Hope you make lots of profit trading. Talk soon.